Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market attempted a balanced breakout above the 77 to 79 resistance area, which we're now going to be using as the micro bull bear zone at 77.5 to 2080. And the question heading into the open is really going to be whether we can get a sustained upside balanced breakout above 77.5 to 80. As long as ES is holding above that zone, we are still in a balanced breakout scenario, and on the upside, the market has already tested, and we've already seen a response off the 87 resistance. So at this point, if we continue balancing above the micro bull bear and then head back up there, we may not get much of a response, and ES could end up going all the way up to the 93 quarter to 95.75 initial resistance zone. That's going to be the primary upside target in the event that ES holds above the micro bull bear. Now, one thing to keep in mind is that we've already seen a really wide range in the overnight session, and as we head higher, we are going to be exhausting the range potential of the day. Now, we can still go up towards the 93 area, but as we get up there, the market may just start running out of steam simply from exhausting the range potential on the day time frame. So that's one thing to keep in mind. So off the open, to establish our bias, we're going to be keeping an eye on the 77.5 to 80. As long as the market's holding above that zone, it tells us that the balanced breakout is still intact. And if we get a failure at 77.5 to 80, it doesn't mean that the market necessarily has to be extremely bearish or anything, but it just tells you that the breakout attempt is failing, at least in the short term. And from there, we can get a pullback to 68.5 to 70.5, and that's still an area where buyers can be active. So, sometimes the market just needs to kind of do a little bit more consolidation and balancing before it can head higher. So a break below 77.5 to 80 would simply alert us that the upside potential is fairly limited now. But it doesn't mean that the market has to make a big downside move either. And that 77.5 to 80 is going to be a very short-term gauge of which side is being dominant on the day time frame. So ideally, for buyers, ES actually holds above 77.5 to 80. We continue balancing above the micro bull bear, and that can ideally take us up to the 93 quarter to 95.75 initial resistance. That's a spot where we can get profit taking and responsive sellers can be active. And in the event of a range extreme, the 98 quarter to 2175 resistance zone can actually shut off the buying, and the market can start balancing from that point on as well. So off the open, the main idea to keep in mind is that above the micro bull bear, the buy side is dominant. So any shorts taken above the micro bull bear, especially near the micro bull bear, are going to be a bit more risky. It's better to wait until the market actually hits a key resistance area if you're going to short this market, or the other scenarios if the market is all out failing at the micro bull bear zone, and let's say we now have an established sideways range where the market's balanced for 2 or 3 hours and now it's breaking outside of that range to the downside, then that's a short-term setup and it can still be taken, but based purely on trade location, you would not want to enter short immediately above the bull bear zone, because the buy side is still going to be more dominant there, and that is a short-term inflection point. It is a short-term area of support now heading into the open. So we're going to be watching 77.50 to 80 to figure out which side is in control. As long as that side is holding, we can go right back up to 87, 89. That's very doable for a retest of the overnight high. And then if we are seeing strong upside momentum, the market can get up to 93 quarter to 95.75, although the range potential by then would be quite exhausted. And then on the downside, if you fail at the micro bull bear, ends up being a failed overnight breakout, then we can pull back to 68.5 to 70.5. Buyers can still be active there. That's still a fairly important support zone. A failure at that zone would bring the 59.5 to 61.5 into play, and again, responsive buyers can be active there. So given how bullish the overnight session has been, even if this bigger picture breakout attempt fails, the buyers can still be very active at pretty much every support zone on the way down, and it doesn't necessarily mean that the market is going all out bearish. And the only way that we would flip our bias to the downside is if we saw strong downside momentum. If the market started going down where it seemed like it was more of a panic type market, then it's okay to hold back. But otherwise, every support zone on the way down is very likely to provide some sort of reaction and could even shut off the selling, and ES can go back up to 77.5 to 80 and possibly 87 to 89. So right now, the bias heading into the day is more bullish than bearish, but we do have to keep in mind that we're opening outside of this pretty established balance area above 77.5 to 80. So we do want to see that continued upside momentum if the market is going to go higher. And simply a lack of upside momentum, above the micro bull bear can result in a pullback, and at least short-term prices can come down and kind of consolidate a bit. So the main thing to focus on off the open, as far as the market internals go, is the NYC tick to see whether it's holding above zero and if we're getting some pretty decent upside values, because simply a lack of momentum can result in some lower prices where the market kind of pulls back to some better location and then the buyers step back in. But right now, as long as we're holding micro bull bear, if we're getting upside momentum, then we want to be very careful on the short side, because right now the market is in a bit of a correction mode, and we may be headed up to 93.25 to 95.75 before we get any decent selling in this market. And if we're getting a lot of upside momentum and the markets are in more of a trend type scenario, then even 98.25 to 2175 would not be out of the picture. It is possible, although not as probable as a retest of 87.89 or 93.25 to 95.75, simply because the range potential of the day would be very much exhausted by then. So those are really the main ideas heading into the open. We are going to focus more on long setups, but we do want to see that momentum behind the market in order to do so. Otherwise, understand that up here is aggressive location, right? If you're purely looking at trade location, this is obviously a very aggressive price to be buying up here. So you need that momentum behind you to really support the idea. And without it, it's going to be better to hold back and wait for a little more clarity, or just wait for the momentum to actually come into the market, and then location is not as relevant, and you can trade it up to 87.89, 93.25 to 95.75. And if there's a lot of downside momentum, then we could be heading down to 68.5 to 70.5. So those are our main ideas heading into the open. Let's see if the buy side can maintain this overnight breakout, and we'll take it from there.